learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in at April 6, 2020, and the stock market is going to go crazy. I know I say that a lot, but this next week is going to be very pivotal. We already saw the oil meeting that we were expecting over the weekend. That got canceled, so we're going to see an effect with oil tomorrow. We need to talk about that, but we have earnings right around the corner, and now, even though there is different health numbers coming out and that's affecting the market, that's one thing we're watching for. But what the market does here, whether it stays in this range or if it moves ahead of this next earnings season and what we got coming, this is going to be very, very telling. So what happens this week is going to be crazy. So we have a lot we need to go over. I got that for you. Got the keys. I got the plays. I have 3 different plays that I made on Friday, as well as the 3 earnings plays that I want to look at right off the bat, because those are going to be important. And that is something you guys are going to see me start doing here, is set up for some of these earnings plays. Now, the only problem is what we have been experiencing this last few weeks, and that is the premium pricing. So we got to find the balance and we got to get a good price. So we're going to go over that. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free 99, youtube.com/the stock market. All we ask is that you are positive and respectful. You can see the chat, the plays, questions, news, any important press conferences. Just we better see you there. So don't forget that. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? What are you in? What are you setting up for earnings? Are you not going to set up for earnings? Are the premiums too high? Let us know. Source that info. But let us not delay. Right off the bat, as far as the keys are concerned, the number one thing we're going to be looking for tomorrow is that oil meeting. So that got delayed until Thursday. Watch any talks in between and how that moves oil, or even now, if we actually do either see that get postponed or if that continues on, watch for how the markets are even going to move till Thursday. However, the market was expecting this for tomorrow. We already saw what happened. You know, the last few days with oil, oil has been up a lot. So if you guys don't remember from last week, I mean, oil had a nice bounce. It was even outpacing, you know, this purple here is China, but that it's kind of been reflective with the overall market. We're back still under 30. That's that key point, and still down like 40% in the month, I believe. It's not loading up there, but what happens tomorrow with oil, that is going to be important. That's going to be one of the main things I'm going to be looking at. We've been discussing oil in general, so that's even going to set up to some of the plays. We're still holding some of those oil plays, but they got killed with the premium. However, this is starting to look like a good time to even average down or make a move, but I'm pretty sure we're going to see a lot more volatility with oil in general. So watch that. Watch any intermediary effects, if there's any rumors or anything else with that. But now moving forward, the key is going to be how we handle the levels that we're at. We've been in this range, that 246.50. We had this little relief rally. We had these certain lows when we started breaking out. But now as the news is developing, obviously we've had bad data like the jobs report. You're getting some bad news, some good news, some updates on the virus and everything happening. So now the question is, how does the market respond now as we start getting more information? But now coming into earnings, the question is, where do we start trading from as the earnings season begins? Are we like right in the middle of this range? Are we at the top end of the range? Or are we going to be at a newer low? So remember what I said the last week. If anything, we're trying to keep a timeline. Pretty much, where do we end by the end of April? The real question is, do we see more new lows in 2020 by the end of April or not? And that is going to be a key time frame to watch out for. So that's what I'm watching. But now, finally, this is going to have to do with the plays. This is going to do with everything setting up, because as we're seeing the market slow down, unless there is, you know, something big that comes up here, and, you know, this equal and opposite force thing is gonna come up here, then what happens at this level, and just even how the market treats these types of moves, or how even the market treats getting any more information and being here, pretty much the earnings is going to be the most crucial. I mean, I really, really can't say it enough. Again, where we're at the levels, but now it is all about the data that we have. It's what do we have now with expectations? What do we have compared to last earnings? Pretty much, I think nobody knows. I can't say this enough. Nobody knows. And the advantage of that is, so does it mean I know what's going to happen? No. What I am saying, though, there's going to be a big, big margin for a lot of surprises to happen, and that will cause moves. That will give us some confirmation, and then we'll even see what even happens this earnings will tell us more about the next earnings once we're really start thinking another quarter, 2 quarters ahead. This is the first data set we're going to see with earnings. So how this plays out will let us know even how these next earnings are going to be and how we should even be expecting anything moving forward. So that being said, watch out for that. I'm going to be doing the plays a lot focused on earnings and making sure that we have our hand in the cookie jar with those. However, now make sure you start actually setting up for some of these earnings. That's what I'm going to be doing. So the criteria is still in play. So we have a video on this. It's that video how I turned Tesla 160 into 1600. We could talk about it a little bit here today. I'll show you guys with some of the plays that we did, but I want to take full advantage of this, and this criteria is pretty much where the market makers and the option chains are pricing in a big move for earnings, and then you could get just outside of a big move, 2 standard deviations for less than $50. I did a play like it last week. However, what I'm saying is that the criteria still looks like it's working. That Chewy play failed, so we have to start watching how these earnings are, and this is why I'm bringing this up, because the criteria is still going to be working. I'm still going to try it out as I start setting up for these earnings until we see what happens, until we see, okay, well, there's just so much volatility. Every play, this is the part that I'm looking for to fail, is that every play right now, the volatility is still so high that every play is going to be pricing in a huge move, so it could skew some of the prices that we're seeing. So watch out for that. Come up with a strategy, pretty much even with what we're expecting with earnings. If there is going to be surprises, most of them I'm going to play both ways. So despite there being a lot of bearish sentiment and there being a bearish market, my goal here is going to be getting both ways. So even the puts we have now with time, I'm already set up in those. If we're down on those, or if those come back to break even by earnings, it's going to set us opportunity to buy some calls for cheap. So keep that in mind. But I mean, let's get right into it. Let us get into the plays. So right off the bat, these are the 3 plays I made on Friday. I got my booking play. This is the one that I really wanted. I've been looking at booking for a really long time, but it has been hard to get. And why do I like booking? It's just like the Expedia. It's just like the United Airlines. It is hit directly by the coronavirus. However, booking is actually holding up a little better. So you'll see here, I'll show you guys the chart here in a second, but the play was I bought an $800 put for July, and then I shorted the $700 put. So we did the debit spread. We talked about this. I still have to spend $1,200, and that's a pretty decent amount. So I spent $1,200. Max gain is $10,000 a contract. So in this case, it'd be like $8,800 because we spent $1,200. So it's still not bad, but it covers earnings, and in this case, it's still decently close to the money. So that's what I like about it. But now, like I said, just the main point with it, you can see here is booking's chart. They're already down a lot, but compared to any of the other travel stocks, they're coming back to their 2015, 2016 lows, but everything else is at, 10, 15-year lows. So I like that. I think we're kind of waiting on earnings, and you could even see their chart over the last few days. They've kind of not been reacting as much, even though it's a $300 move from the bottom. You could kind of see even on any of the good days, they've kind of been chilling out here. So I really think just even when the chart looks like this, as we've seen with any companies, sometimes they're just waiting on earnings to kind of finalize the move, whether or not it's going to stay low or if they're going to kind of bounce up and establish a new range. So got that play. It was July, as you see here. It's pretty, it's decently far out of the money. I think that's within 2 standard deviations, I want to say. Yeah, because 800 is like right there. So the key with this, again, it's a debit spread. This contract would have cost $4,000. So we buy this contract and then short the 700. So there's $100 difference between these. So even if booking dropped, we would still be able to make money on the difference. It caps how much we could make, but it allows us to get a cheaper play than spending the $4,000. So that was still an expensive play. I like it, though. I like booking in general. I've been looking at that play for a really long time and been waiting on it. So it's been hard, and the key that I got with this is making sure I got earnings. So with $1,000, even if you wanted to spend a little less with the debit spread, you could get a play a lot closer to the money or cheaper. But the question is going to be, does it cover earnings and how much after earnings? So despite this is a big earnings tip, if you're going to be playing any place for earnings, you want to make sure that you cover not only the week of earnings, but even a week or 2 after earnings. So if it moves in your direction but doesn't necessarily hit, you could still profit off of it. But if you buy the week of earnings, even if it moves in your direction, but then there's a little bit less of time there to kind of hold up the value, you will still take it out. So there's that. And then the next play, I grabbed a Guild May 15th 115 call. I got 5 of them at $1.30. So I spent a little bit more, and the logic was Guild kept going up again. I think they had a news about them getting some sort of, secondary approval or something like that. And I'll show you the other play we talked about. But again, this is that game of musical chairs, and we were playing the weeklies, so I missed out on them. And that's where I was kind of thinking I'll play them every other week. So I didn't play them. We got them for the last week. They expired. I didn't play it at all this week. So we kind of sat through this. So then I grabbed it here on Friday, kind of setting up for this next week. But instead of going the weeklies, I figured, all right, I might as well grab some time. So I grabbed the 115s at $1.30. So they pretty much held that price there, but you could see they're a lot cheaper. So take a look at how the stock has been looking, even if we wanted to overlay it. You could kind of see, so this is the risk of playing these biotech stocks, but, if you're able to get them with that game of musical chairs when they pop off, then you'll do pretty good. But I like the Guild, and that even being said now, the next play we got too was a regen. So that was the second play I got. I talked about this one, and I grabbed May 15th, 720 calls. I grabbed 2 of them at $2 a pop, so I spent a lot. And then this one, it was crazy, because even after I got this, these chains are very, very liquid. So this one kind of held up its value, but ended up coming down. But then watch the 690s, because this was one that we noticed. We were talking about it. This one, you could see it was a crazy fat finger after that trade. So it's hard to play some of these biotechs, and that's what you're going to notice, especially, Guild is going to be a little bit easier in a way because the chain is a little bit tighter, but you could start getting the problem with any of these biotechs is just like this. You could get caught by, way out of the money, but it's still going to cost a lot of money to play. So that's what you have to watch out for. But Regen has a few pieces in news, one related to what they're doing with both the virus, as well as I think they have another type of drug approval thing coming up. So you could see they're kind of doing the whole biotech dance as well, but they're holding up a lot better. So remember, we played them that first time. I like them. They can move crazy, and any of the days, what I've been seeing when the market goes down, but you start to see a company really, really hold up. That's even what Guild was doing the other day. Guild, when the market was down yesterday or on Friday, a few percentage points, Guild was actually doing pretty good. So watch out for any of those companies. I like those biotech, and those are the top 3 right there. So those are the first 3 plays that I made. I made all of those trades on Friday. Again, option trading, there's almost no purpose only. Thank you. But seriously, do not trade anything here. I'm documenting this so you guys could see what I did on this. But now the next plays I'm going to be looking forward, moving forward is going to be Amazon, Google, and Facebook for earnings. So we already have those 2 big Amazon plays. Remember, we even grabbed some more of those Amazons from last week. So that plays up like 7%. Remember, I got those September puts. But then the next one, I don't have anything on, and I want to see if we set up is Google. We have the Facebook play. Those things are doing good. Another company I'm going to be looking at will be SCO. So that play got clapped. I remember we bought that for like $1,800, and that play is now down $1,000, 70%. No, so we bought it for $1,400, but it's down $1,000. That's till July. And even then, I was thinking, if I did want to short oil, I might even just get the shares now at this point. However, this is going to be very, very dependent upon oil, and this is why I'm saying watch oil, because whatever the effects of these rumors, the power it's having on the market in general, this is going to cause some big moves. So, and we saw what happened with SCO and all those oil plays. So that could move a lot, and that's going to be good. So I like them. Same thing even here with Yang. So this is a short on the China stocks. And remember, we saw what happened with LK. And in general, Chinese stocks outperformed in March by 4%, which is very, very weird. So, well, not weird, but I think, if we are going to see in the name of rotation and someone does good, and then whoever does good ends up doing bad later, I'm going to be watching the China stocks. So we could either go a la carte individual plays, or if we could get a good cheap play here on this Yang. Yang is like the ETF or the UVXY of China. Watch them, and then I think everything else we said, watch those. Then Coca-Cola, and watch some of the value tech stocks. Even on that note, I'm going to be watching HD and McDonald's. Still haven't averaged down on those plays. Those are down on the longer term puts, at least like 40% or so. But watch Coca-Cola. I mean, one, we have those shares that we picked up. I want to see, I only bought half of the amount of long-term shares in the portfolio, so I want to see what other stuff we buy. However, Coca-Cola reports, they're going to be one of the first companies to report, so I want to see how they do, and even whatever their guidance they give, they could set up some secondary plays. You could play everything from Dr. Pepper down to Pepsi, or any of these food and really high-quality dividend stocks that people were kind of expecting to hold up after Coca-Cola's earnings. That could tell us a few different things, so watch them. Same thing even with Starbucks. I don't think they report early. However, I talked about this play, but I checked the options premium. They're pretty expensive, so it's a little pretty hard hard to play Starbucks. I still like it. Intel, low volatility, and I think it was a Dinero or somebody brought this up on the stream, and it's like Intel, low volatility, but try to find the plays that have 50-cent increments on the option chain. So when you go look at the option chain and the strike prices are $2.50 apart, like Apple or Tesla, it's telling you a little bit about the stock. Find the companies that have an option chain only 50 cents apart. Those are going to be the good ones that you could find some cheap plays that could surprisingly move a lot. But watch Intel, then Nvidia. We still have that one longer term play. That thing is down for their earnings, but I want to set up something on them. I like how they're moving in general. And it looks here that futures are going to be opening up 200 points. Do we get any pre-market action? No, but that was my latest news alert. So we'll see. We'll see how that plays even out over tonight. But watching the video, I'm going to be watching them. HD, McDonald's, and then Walmart. We had that play at close. You saw them doing good, and they're doing very, very well in the midst of all this. So remember, compare their last earnings. I forgot, when was the last earning? It's literally just looking how it was not too long ago. Very, very impressive. So this could be either good for long term, playing for earnings, the short term, if this does end up giving up, but something up with Walmart, and it's going to cause a move whenever it really solidifies which direction it wants to be in. So I like that, but the premiums are a little bit higher. Then finally, the trifecta, and like I said, on these plays, we're going to need more time. They keep bouncing all around the place with GLD and TLT and UUP. They kind of came back up. We're still a little bit down on the September, so I haven't averaged down on the longer term UUPs just yet. Still waiting, and I said with this place, UUP, GLD, TLT, the goal is to get as much time as possible, and really don't be too quick to judge this play. Some people might be better off just turning off their computer. I said that the other day. Made these plays and then didn't look at them. We probably would end up be better off at the end of the day. So we'll see there. But at the end of the day, too, watch AbiVi, Snapchat. I'm going to see, because we still need to make some more long-term purchases. I want to even see how they kind of even hold up. AbiVi's been doing good, and I want to start paying attention to earnings and the quality names that have kind of held, in the midst of all this. Pretty much the dividend yield on AbiVi has stayed relatively the same, whereas some companies, it has drastically changed. So that's what I want to look for. And then Tesla, they had that big move on Friday or Thursday, and they already are moving a lot. I want to see if they keep that up. If they do, that could kind of be one of those, think what Boeing did last week, and keep watching Boeing. I might want to make a double dip on that one this week too, but that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your helmet on. I need the armor shining. It is game time, baby. Earnings season is around the corner. This is your opportunity. Spreads and events. It's another event. We'll see if another event hits at the same time. You got to control the budget, control the balance. As long as you stay alive, you will have opportunity. And even if you get crushed, just get the time and clock ready. When is the next month you get back in the game, baby? We got to take advantage of this. We got to be ready. A lot is going to happen. I don't know what to expect. Don't have too many expectations. Just keep your head in the game, baby. The code loves you. I love you. I'm going to see you in the morning. Let's go.